We are looking live at the Nasdaq daily chart. The Nasdaq barely eked out a gain today after being down most of the day, and that's what you want to see, in an uptrend is the index starting, an opening weak and closing strong, and that's what it did today. It was up 11 points, closed at 15,609 on lighter volume, but we had a 007, a James Bond day today, as it was up 0.07%. Like I said, on lighter volume. But the index is run from October 26th to today, which is February 6th, more than 3 months, nearly 14 weeks, and we only had the one pullback of more than 4%. That was 15,150 to 14,477 from December 28th to January 4th, I believe it was. So, the end of the year, Santa Claus, no Santa Claus rally. Yeah, it was a 28 to the 4th, and then we took off and rallied again, just pulling back to the 21 a couple of times. But so we are due for a correction, and I think it's wise to sell into, spikes. If your stock is spiking like Decker's, we saw that spike on earnings, and Lilly this morning. It's always good to take some profits and, put it in the bank. You don't have profits until you sell. So it's always good to use those spikes to sell. But anyway, it's in a power trend. Like I said, it's been like 14 weeks, and we're just loving life. But it's always wise to take profits and be cognizant of the length. This rally is long in the tooth, and we haven't had a correction, so it wouldn't surprise me. A pullback to the 21. The index is it was 2%, 2.1% above the 21, and it's a rising 21. These things are rising nicely, as a lot of our stocks are. Anyway, I wanted to get to the Russell 2000 because that was the outperformer today. It was up nearly 1%. It pulled back here to its 50. I got to consult the weekly charts here because it had this long consolidation, then it had this 4 weeks pullback, and people freaked out. And then it rallied up, and now the last couple of weeks have pulled back a little bit. Today, it was a little stronger, and it's good to see the rally spreading out to these. And you're saying, what are the big stocks in the Russell 2000? What's the ones, like SMCI and ELF, some of the ones that I'm going to go over here in a minute. But anyway, the Russell, we want the rally to expand to the smaller cap stocks, and you know that the Russell 2000, about 17-18% of this index is just a small cap regional banks. A lot of small financial stocks are included in this. So you want to see it, the rally spread out. It can't all be tech all the time. So and that's why I always look towards home builders and retail and other sectors, and not just the tech sector, or the Magnificent Seven, which is now the Magnificent Six, since Tesla wants to, I don't know what they're doing at Tesla. Anyway, Apple, like I said, this Apple Vision Pro, it could be a game changer here. Last couple of sessions, it's gotten some love, but after reporting earnings of 2% growth, it's hard to get investors excited. The thing that Apple has going for it is the largest stock buyback program in the history of the world. And then Warren Buffett, of course, is a big, diamond hand holder. And then you got the institutions that have to own Apple. You have to have that in your mutual fund, your hedge fund, whatever fund you're running. You get fired if you don't have Apple in there. So it's kind of like IBM from the 60s and 70s. You had to have it. Anyway, Apple looks okay. It's treading water. Microsoft here, once again, just kind of going sideways. A lot of stocks are doing this that I'm seeing. You'll hear people on Twitter saying it's going to crash, but, all they're doing is just going sideways, consolidating gains. This looks totally healthy, just pinching in here. Don't listen to the peanut gallery, financial news, or God, they're so negative. Meta had this big gap up. I forget how many points it went up, 80 something points. Yeah, 80 points, and then give back 15 yesterday and 4 today. So we'll take 80 and give back 20. Okay, we'll take that every time. This is doing nothing wrong. It did undercut The low of that day, though, 453.01, no, 453. So maybe the 453 right there will be your, the bear case right there, right? 453, and maybe it'll pop up and then retest that level. But that's definitely your magic number on Facebook or Meta platforms. Amazon, same thing, had this big gap up on Friday, 12 bucks, get back $1.50 to buck today. So we'll up 12, down 2. We'll take it every time. What you don't want to see is that, trying to fill this gap here. The low of that day was 167.33, and it hasn't taken it out yet. So you don't really want to see that. The high of the gap day on February 1st, last Thursday, the high that day was 159.76 and a gap Friday. So you don't want it to close that gap. And you can see these moving averages rising. So Amazon looks great. And I'm looking forward to some of these software names that are associated with Amazon and see how they perform, like Datadog. This is Google, sold off after earnings and it's been up 4 days since. Just, pull back to the 50 and then find support and then moving back up. That's textbook stuff right there for Alphabet. And the last of these Super 6 stocks is NVIDIA. And I know people are just going berserk on this thing. NVIDIA is fine. Yeah, it sold off today, but it ran from what, 473 up to what's almost, it was 700, I think, in pre-market. So give it a break. It was up on Friday, it was up $31, and then on Monday, it was up $31, and it gives back $11. It goes up $62 and gives back 11. So what? It does have the 666 high from last Friday, and then gapped higher on Monday, and the low there was 672.05, and then it closed that gap there at 666 today. You see the low was 663. So it's very symmetrical there. You see the gap high 6660, and the low today was 6630. So that's a gap fill, and I think that's healthy longer term. If you want to go to a 5-minute chart and just dissect this thing, there's your gap higher. And then the pullback here, which closed the gap, and then it ran, into the close, so it looks fine. You know what? Take that back. I'm going to go to the weekly chart because you got to consult with weekly charts whenever you're considering, buying or selling a stock. I always consider and consult the weekly and monthly and all the different time frames just to see what's up. And to me, this thing is it's not a sell unless it makes a low below 607 from last week. It's going to wiggle around a little bit. Today it closed that gap. The low this week is that 663. So, we don't want to see it going below that, but we'll just see what transpires in the next couple of sessions. But, this thing's making higher highs. Geez. I mean, sometimes I think we watch the stocks too closely and we expect too much from them. This thing has been a workhorse, a stalwart, and it's doing fantastic. Here's a AMD down 5.5% this week. All it did was pull back to its 20 once again. It's 21 EMA, this magenta line here. So these lines, the moving averages are trending higher. So as long as it stays above the 21, and that 21 is moving higher. When it pulled back to its 21 last time, the 21 was 161.84, and that was on January 31st, which was last Wednesday. And now this Tuesday, it's 165. So you see it went from 161.84 to 165.19. That's what I'm saying is that as long as it stays above these moving averages and you're holding it, you're making money. It's just not going to go up every day. And to me, I mean, we'll see. I think it finds support there and will bounce. And AMD looks fine. It went from 93 to 185. It was a two-bagger. So let's give these stocks a little bit of a break and allow them to wiggle around a little bit. Gosh, we're expecting an awful lot from these. AMD doubled. So MRVL. Now this one looks to me like it's setting up. In this stage 2 base here, this long consolidation from June. So it's looking at 8 months, and now this nice pullback to shake out weak hands in the last few weeks. This thing looks textbook to me. You can see this, I'd call this like a handle here as it just pulls back with, the lighter volume. This looks like textbook stuff. It's not going to break out, today or tomorrow, the next day, but just keep it on watch. This thing's ready to make a move. I don't know what the catalyst will be, but maybe an upgrade, maybe a earnings report from one of the other ones, but MRVL looks good to me. And then TSM, Taiwan Semi, this one made a new high today. This is a really big 620 billion semiconductor stock, and this one's making new 52-week highs. You can see the volume that came in after earnings a few weeks ago. It's up 3% this week, making new highs. Taiwan Semiconductor looks good. That's one of your, bigger, bulkier stalwarts from the semiconductors. Anyway, I'm going to get out of the semiconductors. Except for I lied. I have to go to SMCI because people are driving me nuts with this stock. I went and played golf today. I saw it down like 25 bucks. You have to expect it. I mean, it was up, 85 bucks on Monday. It's been going straight up. Yeah, I'm going to take some time here and stretch out with SMCI. Yeah, it was up $83, 14% on Monday. And so you figured today it's going to pull back. I figured it would. And so, yeah, I just went golfing. I can't sit there and look at the screen. And it pulled back. And then the bulls came in and it rallied back up. And then it boom sunk. And oh, it's going to crash 150 points. No, it just came down to its, at 625. I'm going to go back to the daily here. Sorry about jumping around here. But I want to show you the moving averages here because it's been hugging its 5 EMA, which is, fantastic for a momentum go-go stock. You can see right here, it just pulls back to the 5 every time, pull back, pull back. And today it didn't quite get back to the 5, which was 616. We'll call it 617. It came down to 625. So I don't know, maybe in the next couple of days, but it's definitely tracking on the 5. And like I say, you don't have to own it very long. And as long as that thing's going up, let's just track a few days here. 526 to 544, that's $18. And then the next day is 584, that's $40. And then another $30. So it's going up, that green line there, as long as it just hugs that green line, it doesn't take you long to make money. So I wouldn't be too quick to be selling this stock, and certainly don't listen the proof is in the stock. It's going higher. No matter what anybody says, it's overvalued, it's a fraud, it's a Ponzi scheme. Somebody's buying it. Look at this volume. Okay. Those are institutional footprints. You don't have to be a rocket scientist to figure this out. You look at the monthly, and then in January, it was up 28%. And this month, in what, 4 or 5 sessions here? 4 sessions, it's already up 28%, folks. So let's give it a little bit of a break and let it pull back a little bit. Gosh, super micro. And then watch tomorrow to probably go over 700. But this one has been a phenomenal, phenomenal stock. I couldn't, I went golfing. Like I said, it was down six. I don't know. It was down a lot, 25, 30 bucks. I come back home, it's up 10 bucks. I'm going, geez, I should go golfing more often. Anyway, I'm off my soapbox. I'm going to go to Palantir. It's a stock that I don't really care for. Why? Well, because it's got all of this shares in the float. This is a big behemoth, big battleship, takes a lot of demand to move it. And it got that demand today, move that supply. Also, management owns 7% still. So it's a greedy management team, no doubt about it, but they have phenomenal business and they're hitting on all cylinders. There's no doubt about it. Phenomenal earnings report. I thought their report would lift the entire software and AI sector, but it didn't. They don't have that kind of cachet. I was really surprised, but a 30% move with 700% above average daily volume. I would call that 2185 a new area of interest. Say that. But congrats to the longs. And if it was me and I own that stock, I would be selling that spike. But if you're interested in getting in, I think that 2185 is definitely an area of interest for Palantir. Like I said, I thought it would drive some of these software names that I have on my red list, but it really didn't. Cloudflare reports Wednesday, 8th, Thursday? Yeah, Thursday. And it's been consolidating and pulling back here to its 50. I would call these like bullish type wedge action, but you got to take a look at the weekly. And you can see this, it's trying to emerge out of this stage one base, and it's really having trouble. And that's pretty common for, something that's been consolidating for, a couple of years here. Datadog looks the same way, Snowflake, a lot of these look the same way from November of 21. So it's been, 2.25 years. You're looking at 26, 27 months of trying to get out of this purgatory for Cloudflare. ESTC, now they gapped higher with the earnings a couple of times back in September and then on December 1. And now it's just consolidating in a flat base. And it's kind of doing what Cloudflare is doing, Cloudflare, just kind of pulling back in these little, wedge type action back to moving averages and finding support. So that's what you want to see, that support before a move higher. ESTC looks fine to me. I mentioned Datadog, so I might as well show it. What am I doing? DOG, that is a dog. Whoa, DDOG. Yeah, don't be short the Dow. Wow, look at that. Okay, this is Datadog and AWS. Sometimes you have to put two and two together. AWS numbers are phenomenal. It should bode well for a Datadog. They don't report until next week. The 13th, the day before Valentine's Day. I should know what day that is. Next Tuesday, I guess. But it's kind of doing the same thing, just kind of wedging back to these moving averages, finding support. It's not going to go, it's finding support, but it's not going to take off until the new data point, I don't believe, unless, numbers are leaked or it has a, upgrade or a phenomenal deal announced. But it's going to have to deliver strong earnings for it to move higher. It's not going to go higher because of the chart. Another stock that people think I hate, I don't hate Uber. I like Uber. It's just it's a slower moving stock. And once again, it's got this, lot of fat in the system here. Big, huge float, no return on equity, no cash flow. But if you go to San Francisco and you go by the ballpark, the Uber's got offices all up and down there by, by the Chase Center and by the Giants Pac-Bell Park and with Salesforce. They're a force, Uber, and they're a monopoly, and they're a leisure services ride sharing sector for sure. I mean, I shouldn't say a monopoly because there's competition, but they dominate. It's a dominant force, and I think they're going to do well over time. I don't dislike the stock. I just think you can do better elsewhere. That's all. But certainly, I mean, this would be fine in your longer term portfolio. I think it's going much higher, as is Palantir. It's just they're going to do it the slow route. Okay, that's enough of that. I have to mention a couple other ones. One is DoorDash, because it made a new high today and broke out of this base, pulled back to the 50 for the first time. And you know what we say, that's a gift, right? When they pull back to the 50 after a breakout from a base, there's your breakout, there's your move higher, there's your pullback. Does it find support? Yes. And now it rips higher. So congrats to the longs at DoorDash. What was the other one? Oh, Spotify. Yeah, good earnings report from Spotify today. I don't know, people were saying, they sold the spike, which was really smart, so congrats. But it closed near the low of the session, 15% of the daily range. So still, nearly a 4% move with volume. I think, the longs have got to be pretty happy with that. Anyway, oh, I got one more. One more. I'm going through the software today. Computer Tech Services, Giga Cloud Technology. I listened to their, over the weekend, I listened to their conference call from the last earnings report, and it was pretty impressive. And the stock has certainly responded, and it's just getting support, at these moving averages. So when it spikes, people are selling it. When it comes back, you buy it. I have this right here just as a standard there, 26.45. And if it pulls back just a little bit as these moving averages rise, maybe there'll be an opportunity there. So yeah, I like that one a lot. I've got to get to the retail names. I mentioned Deckers earlier, so I'm going to go there. Deckers broke out, it hit an all-time high before earnings. And when earnings hit, it had like an $80 move or something. Yeah, it was up to 903, 14% move. And now it's coming back to fill this gap. So that's why I say it's okay to trim, take some profits, that gap there is at the 778. And even though it went up $109 on Friday, yesterday it was down 30, today 26. So it's given back 756, and the low today was 815. And that number, the magic number is 778. So I don't want to take that trip. Might come back to the 21. So anyway, Deckers it's been on a tear for a long, long time. So, it's expected to take profits. I'll just say that. Okay, I was going to get to ON. I think they're taking market share from Nike, like the Hoka brand is. This thing's just stuck in purgatory again, just going sideways below its moving averages. So, that's not a good thing, but I'm looking for maybe if it can cross above the 200 simple moving average there, about like 29.50 maybe, and get some mojo. Keeping my eye on that one. Just trying to stay flexible, have an open mind. I'm just showing you some weaker retail names here that could be golden here. This one, Celsius, crossed above its moving averages. So that's what I like to see. I've mentioned this many times. I think people get sick of me mentioning the same stock, but it made a low, retested the low, undercut the retest, undercut the undercut. There's a seller in there, folks. So you could call this maybe a double bottom if you want, or whatever. But and then your handle, which was another retest. But now it's, it bounced off its 200. Now it's above all its moving averages. So Celsius to me looks pretty good. And I know they're doing great business selling product. So I don't know if you like the product or not. It doesn't really matter. The standard buy point there, paint by numbers, is 68.95. You want to wait that long? I wouldn't. But anyway, that's your choice. Do what you want. And Dick's, not Dick's Bakery, Dick's Sporting Goods, definitely breaking out of this long consolidation from last March. And this is nearly a year of consolidating, and it went way down by 100 area. Yep, hit 100. Now has rallied back up to 156. And it looks to me like it wants to break out. Earnings are on May 5th. Once again, you got to take a look at these. Always look at the float here. This one only has 54 million, so it has the ability to move with not much demand. SMCI, you want to know why it's moving so fast? It only has 45 million shares on the float, and it's trading, what, 20 million a day or more, right? Yeah, volume 18. So that's why they move, folks. You have to understand the fundamentals of the stock. Eli Lilly, outstanding report today. Couldn't ask for more. So what do? We sell the spike, right? Buy the rumor, sell the news. This thing moved from 561 up to 742 in a pretty short period of time, but it was consolidating while the Nasdaq was rallying. So I kind of expected this big rally here, but that's a pretty big move for Eli Lilly. 672 was the high last week. The low this week is 682. So I wouldn't be surprised to see it close that gap there. Novo made a deal yesterday with Novo Holdings, bought that Catalent. It's up 3% this week. Doing nothing wrong. Like I said, you can see how gappy it is. Gapped after earnings, and then gapped yesterday after announcing the purchasing of the 3 manufacturing plants in Belgium, Italy, and the United States. And they're playing the long game, Novo Nordisk, and so is Eli Lilly, and just two phenomenal franchises. AXSM, this one was upgraded today. These guys have a pretty decent pipeline. They have some great drugs, and you can see this is consolidating here in a stage 2B base, a later stage 2B base, 2B or not 2B, but you can see it kind of trading sideways here as the moving averages catch up, just finding support there at the 10 EMA. So AXSM, Axsome Therapeutics, looks really good to me. And then GE Healthcare, I'm going to throw this one in this group, this medical group. It was up nearly 12% with a strong volume today. So that one looks good as well. I'm going to branch off today and go to the insurance companies. This is Willis Towers Watson. So what you doing, Willis? What you talking about? Well, I'm talking about a breakout here from a stage 1 base. This is an insurance company, kind of a slow, stodgy stock, but hey, this thing was up pretty nicely today, 7%. So we're gonna watch that one. And also, bro, love the ticker symbol, Brown and Brown. Uh, just pull back here to its moving average, consolidating. These are slower movers. And then CB. Chubb, this one is making new highs, so I thought I'd point that out. These insurance stocks are showing some strength there, flexing a little bit. And that's all I have for today, except for I lied. I have one more thing. We've got the flying burrito flying after hours up $60 here after reporting strong earnings. So I don't know if this has enough juice to lift the restaurant group like McDonald's and Wingstop but Texas Roadhouse. We're going to find out though. Is a really strong report from Chipotle. Fortinet reported, and it was lukewarm, okay report, but not much of it is expected. But you can see this is breaking out up 11% after hours. So definitely one to watch tomorrow. I had this on our ready list, and I know people are really hesitant of taking on anything ahead of earnings, and rightfully so. It looks like it worked out for Fortinet, which has been beaten up badly. And I think that, the worst was expected and the worst was anticipated. But the best report I saw after hours was ELF. These guys crushed 85% sales growth. So you're seeing accelerating sales growth. I think it was 275 something million this quarter. They raised their sales guidance, they raised their full year guidance, they raised their margins, they raised their EBITDA, they raised everything. Mentioned they were, going international now, and it's full guns blazing here with Health Beauty. I was a little hesitant. I sold a little, trimmed a little today because heading into earnings, it made a new high there at 174.65. So I said, I'm gonna part some out. So what did I do? I waited after hours and I bought them back. Just kind of insurance. Um, because I've been burned a lot in earnings. I had a good feeling about ALF, and I think it's going to run to 190 or so from this a measured move from the breakout from that 153 where it formed that handle. So anyway, this definitely does not have the cachet to lift the cosmetics personal care group, but I think they're taking market share from that Maybelline, Revlon, Estee Lauder group contingent, and they're definitely popular with the younger crowd, and making a nice move after hours here. So it's definitely one to watch. It's one of my largest holdings, along with SMCI and NVDA and CrowdStrike. And anyway, it doesn't matter. Uh, I'm going to sign off now. I'm just going to say thanks for watching. The market looks fine. It's a stock picker's market. If you own some stock, you're getting crushed. If you own the winners, you're doing okay. So stick with the winners basically, and just be a little cautious here, prepare for maybe a little correction. That wouldn't surprise me, but we're in an uptrend. So we want to ride these trends higher. You want to ride your winning stocks higher. You want to let them run higher. Like I showed you before, SMCI, this thing's just riding higher. NVIDIA, those moving averages just riding higher. There's a lot of stocks like this. So don't be afraid to ride them higher, but also take profit, because you don't have, the cash in your account until you trim a little bit. So, you can play with your capital and take some profits. Anyway, that's it for me today. Thank you for watching at mcstockcharts.com. We've been doing really well, and we never give up, and we count our blessings, and we're grateful for everything. Thank you for watching.